Hi trader, welcome to Elite Currency. This is a Forex video taking a look at what we think are the best trends in the Forex market on this Monday, 24 July 2017. Let's kick off this video with the New Zealand against the US dollar. The Kiwi dollar, New Zealand USD, basically an uptrend here after breaking to the upside. You see that price has already a long time ago broke this trend line and is basically trying to push through this horizontal resistance as well, and it broke, bounced, and pulled back. As you can see, there's still some tops in here to be aware of at 75. That's an important level, and if price were to break above it, it can continue. 75, of course, is a level to reckon with, is a round level, so that could stop, or basically price could make a consolidation at that spot. But if price breaks above it, I think there's enough space to the upside. If you look at Murray math, basically it is roughly in the mean, and it is not near extreme resistance. Considering the bullish momentum that we see on the weekly chart, look at these bullish candles. And also, if you look at the market structure, if you look at the bigger pattern, you see upside, and you see correction, and then you see again upside. So what does that tell us? That indeed the bullish momentum is probably going to continue. And if we put a fib on this swing high, swing low, all right, you can see that price bounced at the 50 fib right here at the blue one right there. So what is the next target? The minus 272 target, up at 78.30. All right, so as soon as 75 is broken, we could expect price to fill up that space right there, not necessarily in one shot, but it can have that opportunity to go up to the minus 272 target with its ups and downs of the lower time frame to get up to that target. So that's interesting space there for the Kiwi dollar. Let's zoom in to lower time frames to see what kind of opportunities there could be to catch this continuation on the weekly chart. Daily chart, you see momentum, consolidation, continuation, strong bullish candles, and basically price is right at the 5th, 8th of the Murray math, and I think that it's trying to break above it. 4-hour chart, we see pretty sturdy uptrend indeed, and recently hit the long-term moving average and bounced from there. And it looks like price is making a bit of consolidation here. Just a few candles dipping down below. It just could be a retracement, because if you look at the spaces between the moving averages, look at the long term and look at the short term, the space between them is increasing. You can see here, small gap, medium gap, big gap, right? So momentum to the upside, and look at the multiple time frame indicator at the bottom. Mostly green, or almost everything is green, depending on what exact moment you look at. So the oscillators are bullish, definitely clear uptrend on the 4-hour chart. Then when zooming into the hourly chart, what I want to do is add the Fibonacci sequence levels to the most recent bottom of this upside, which is here, and I'll be looking for targets to the upside, because obviously all these time frames are bullish, and if you can look at that, you see that price has broken above 1, 2, and the 3rd level. So from my perspective, the next target is 75. That's the 4th level. And after that, who knows, the 6th level at 76. So step by step, though, for the moment, if I look at the SWOT indicators, I can see that there's a confirmation of an upside at this moment. You can see that price is at the short-term moving averages. And it looks like price could break at any moment. Basically, it would be good if price broke above this trend line, and then I think there's a good breakout to 75. It's not a ton of pips here. I would aim just below 75, by the way, 74.94, 74.92. I don't like to aim for the very last pip, but it's still a decent trade, I think, right in this zone. And you can see that once price hits 75, makes another bull flag, and then breaks above that bull flag, there's another space again to 76, what was it, 50? 40, and then after that 78, 50, indeed 78, 78, 70. So some good space there to the upside if we get those breakouts. First of all, if price does push a bit lower like this, I think 74 could be a bouncing spot, and I think that I would be also looking here for triggers, the candles and the arrows for a bounce to the upside. Therefore, I think any trade at this moment should not use this stop loss, but probably should go below 74. I think that is a safer stop loss. It's okay from a reward to risk perspective as well. I think that is fine. 1-to-1, I guess, roughly. Yeah. So a bit more maybe. So that's good. I mean, if it were to make a dip down to 74, that's great. If it breaks out, of course, then with a good candle, then this stop loss is okay, from my perspective at least. So that's my trading plan. But before the breakout, I would rather use the lower one, because it could still make a small little kind of dip and then turn a bit lower, as it makes kind of a bull flag pattern like this, you see? And bull flags like that can sometimes break just a little bit, make a lower low a couple of times before they continue to the upside. So that's my ideas on the Kiwi. Other currency pair I wanted to take a look at is the pound AUD. Let's take a look at the 4-hour chart here, and to get a bit of sense here, let me get rid of this fib. You can see that price is in the downtrend here too. The space between the moving averages is increasing. We have full confirmation on the oscillators, including the multiple time frame analysis indicators. So downtrend, yep, definitely. And if you add the fib sequence levels, price is now at the 6th level. So with the pound AUD though, we could expect, it's not so strange to see an acceleration to the 7th level, or I should say not acceleration, but eventually price getting there. So this bit could be a bit choppier between 6 and 7. Typically between 4 and 6 you have the biggest acceleration. Well, that certainly happened. Look at this piece right here. This downtrend can continue, but a bit choppier. So I think that there's a good chance of price continuing. You can see here on the daily chart, price is at the 3/8, so plenty of space to continue, and kind of broke below it as well. And if we put a fib on this swing high, swing low, let's take a look at the targets, the bigger targets. Price is at the -272 target, bounced a little bit above it, but if it breaks back below 163, then the next target is basically 160, the -61.8 target. So that's the space available on the pound AUD. I think it's a good trend looking at the 4-hour chart and even the daily chart. So good downtrends on those two time frames. So from my perspective, when we look at the SWOT system here, I think that at this moment there are some signals. There is divergence between these bottoms. So from that perspective, might be good to wait for the next signal. All right, the next signal could be already better, because then price is below the 21 EMA. So I think that's what I would be waiting for. Basically, a breakout below this trend line, I think, or the next signal, I think, should confirm the downside. Now it's a bit early still, just because of the divergence on the hourly chart. There could be one dash to hit the moving average before it turns and falls. So that's the only thing I want to be careful of. Otherwise, looks like a good trend. I'll be keeping an eye on the pound AUD and the Kiwi throughout this week, because from my perspective, the trends on these two are looking pretty good. There are other pairs, of course, as well. But for the moment, we'll just focus on these two. All right, if you like our SWOT system, of course, it's way more material that we offer in the SWOT course. You can check it out on elitecurrency.com. In the meantime, thanks for joining. Please, if you like the video, share, like, and subscribe. And we wish you, above all, great trading, folks. Cheers.